Greetings, viewers. This video comes to life through the power of artificial intelligence, so kindly overlook any glitches that might pop up. Today, we're navigating the intriguing currents of Bitcoin and cryptocurrency, comparing it no less to the lustrous allure of gold. This digital realm might seem complex, but we're here to simplify it, to make it more approachable. Not only will we unveil the mysteries of Bitcoin, its advantages, and its pitfalls, but we will also explore how it stacks up against traditional investment options like the time-tested gold. By the end of this journey, you'll have a clearer understanding of what Bitcoin is, its place in the financial ecosystem, and whether it's a good fit for your investment portfolio. Remember, there are promotional links in the description that help support this channel. Now let the journey commence as we set sail on our exploration of Bitcoin and its comparison to gold. Before we delve into whether or not to invest in Bitcoin, let's first understand what Bitcoin is. Bitcoin, a name that has been echoed in the digital world since its inception in 2009, is the first decentralized cryptocurrency. It was a revolutionary concept introduced by an anonymous person or group known as Satoshi Nakamoto. Bitcoin, at its core, is a digital currency that operates independently of a central bank. It uses cryptography to secure transactions and to control the creation of new units. The creation of Bitcoin was driven by the idea of having a financial system that is not controlled by any government or institution. It's like having your own bank in your pocket, accessible anywhere, anytime, with full control over your money. But how does it work? Bitcoin transactions are verified by network nodes through cryptography and recorded in a public ledger called a blockchain. It's like a massive, transparent, and incorruptible digital ledger that records every single Bitcoin transaction ever made. One of the significant aspects of Bitcoin is that it's finite. There will only ever be 21 million Bitcoins. This scarcity is one of the reasons why Bitcoin is often compared to gold, and why some people refer to it as digital gold. Bitcoin's value is driven by supply and demand dynamics, just like any other commodity. When demand increases and supply stays constant, the price goes up. Conversely, when demand decreases and supply stays constant, the price goes down. Now, Bitcoin is not just a currency or a commodity, it's a technology, a network, a community, and an ideology. It has sparked a new era of technological advancement and has led to the creation of thousands of other cryptocurrencies. Now that we have a basic understanding of Bitcoin, we can move on to the investment aspect. Investing in Bitcoin can be enticing, and here's why. Bitcoin as a digital currency presents a unique opportunity for potential high returns. Its value has seen a remarkable increase since its inception in 2009, transforming it from a fringe curiosity to a globally recognized asset. Consider this. If you had invested just $100 in Bitcoin in 2010, today that investment would be worth millions. Such stories of astronomical returns are part of what fuels the interest and allure of Bitcoin. Moreover, the growing acceptance of Bitcoin and other cryptocurrencies is another major advantage. More and more businesses, from small local shops to multinational corporations, are starting to accept Bitcoin as a form of payment. This means that Bitcoin is not just an investment, but also a currency with real-world usability. Furthermore, Bitcoin's decentralized nature, free from government control and interference, appeals to many. This independence from traditional financial systems provides a level of freedom and flexibility that other investments simply can't match. In addition, Bitcoin is easily accessible and can be bought in fractions, allowing for low entry levels. This means you don't need to have thousands of dollars to start investing. You can start with as little as you want and gradually increase your investment over time. Finally, Bitcoin's underpinning technology, the blockchain, holds immense potential. This disruptive technology could revolutionize various sectors from finance to supply chain, and holding Bitcoin puts you at the forefront of this technological revolution. However, as with any investment, it's not all sunshine and rainbows. Bitcoin's volatility can lead to high rewards, but it also comes with its own set of risks. While the potential benefits are appealing, it's crucial to consider the risks as well. Despite the potential upsides, investing in Bitcoin does come with its own set of risks. Let's delve into some of those concerns. One of the most prominent risks is the extreme volatility of Bitcoin. Its value can swing wildly in a matter of hours, making it a highly unpredictable investment. One day, you could be riding high on a wave of profit, and the next, you could see your investment plummet. Another downside is the lack of regulation. While the decentralized nature of Bitcoin is part of its appeal for some, it also means there's no governmental oversight. This lack of regulation leaves room for potential manipulation of the market and makes the cryptocurrency susceptible to cyber attacks. Furthermore, while Bitcoin has gained mainstream acceptance, it's not universally accepted as a form of payment. Not all businesses accept Bitcoin, limiting its practical use. And while some might argue that this will change as more businesses adopt the technology, the change is not guaranteed. Moreover, the environmental impact of Bitcoin mining can't be overlooked. It requires a significant amount of energy, contributing to environmental degradation and climate change. Lastly, the value of Bitcoin is largely speculative. Unlike traditional investments such as stocks and bonds, Bitcoin doesn't generate income or dividends. Its value is based on what the next person is willing to pay for it, which can lead to speculative bubbles and crashes. With these risks in mind, it's essential to weigh the pros and cons before making an investment decision. Remember, investing should never be a gamble. It should be a calculated risk based on thorough research and understanding. As always, it's wise to consult with a financial advisor before making any major investment decisions. So, should you invest in Bitcoin even in the short term? This question is not as straightforward as it may seem. We've discussed the pros and cons of investing in Bitcoin, from its potential for high returns to its volatile nature. Let's revisit these points. On the upside, Bitcoin has shown impressive growth since its inception. Many early adopters have reaped substantial benefits, and the decentralized nature of the currency offers a level of freedom not found in traditional financial systems. On the flip side, Bitcoin's value can fluctuate wildly in short periods, leading to potential losses. It's also unregulated, meaning there's little protection if things go wrong. Plus, as a relatively new player in the financial world, it carries a level of uncertainty. Given these factors, it's clear that investing in Bitcoin is not for the faint-hearted. It requires a willingness to embrace risk and the potential for loss. This is not to say that you shouldn't invest, but rather, any investment should be made with a clear understanding of these risks. It's also crucial to understand your financial situation. Can you afford to lose the money you plan to invest? If the answer is no, it might be wise to reconsider. Moreover, remember the golden rule of investing. Don't put all your eggs in one basket. Diversification is key to managing risk. If you decide to invest in Bitcoin, it should form part of a broader, well-balanced investment portfolio. Do your research. Understand the ins and outs of Bitcoin, its potential, and its pitfalls. Take the time to educate yourself before making any decisions. Ultimately, the decision to invest in Bitcoin is a personal one, based on your risk tolerance and financial situation. That wraps up our discussion on investing in Bitcoin. We've journeyed through what Bitcoin is, the pros and cons of investing in it, and whether it's a wise decision for you. It's a fascinating topic, isn't it? And there's always more to learn. We hope you found this video informative and helpful in your financial journey. We encourage you to share your thoughts in the comments, and if you found this video helpful, don't hesitate to hit the like button and share it with others who might benefit. And of course, subscribe to our channel for more enlightening content like this. Don't forget to check out the promotional links in the description to support our channel. If you're watching this on a TV, you'll need to switch to a laptop or mobile device to access these links. Also, you can search for American Northwest Aviation on Google, select the website, and navigate through the menu to our parent venture, American Northwest Ventures. To further support our channel, you can make your everyday purchases by accessing Amazon and our other affiliates through American Northwest Products websites Amazon and other affiliates storefront. Thanks for watching. Now, let's delve into a comparison between Bitcoin and gold, a traditional investment option. Bitcoin, the digital currency that's decentralized and whose value is driven by supply and demand, is known for its volatility. It's worth noting that the total supply of Bitcoin is capped at 21 million, and of this, nearly 19 million are currently in existence. On the flip side, we have gold, a physical asset whose value has been stable for thousands of years. It's a trusted investment option, but unlike Bitcoin, there's no cap on the amount of gold that can be extracted from the earth. Major financial institutions have even gone as far as to predict that Bitcoin could be worth $1 million within the next few years. Selecting between Bitcoin and gold as your preferred investment option will depend on factors such as your risk tolerance and investment goals. Stay tuned, and thanks for watching.